right, ladies and gentlemen, welcome back to the Passive Cash Flow Podcast. I'm your host, Aaron Fragnito, and we have a very experienced registered investment advisor here, RIA, Andres Sandate with ATLalts and Gramercy Park Wealth Advisors. Andres, I wanted to have you on the show here. I enjoyed speaking with you at the Fact Right event and get to know you there, and connected with you a number of times since then. You are a very veteran here in the RIA space, and I like what you have going on. How's your day going, my friend?
Good, Aaron. It's good to see you, and glad to be here. Things are warming up in Atlanta. That's where I'm based. You mentioned the name of the podcast, ATLalts. So, I am based in Atlanta. Really passionate and active in the alternative investment business, and also leading up the growth of our RIA, which is called Gramercy Park Wealth Advisors. So, yeah, we're just around the corner from golf season. I wore my Masters shirt, obviously, for those people that are golfers. The Masters is here in Georgia in Augusta, late spring. So, yeah, we're excited for the conversation and looking forward to talking and seeing if we can help your listeners and guests understand opportunities in alts, and for sponsors and other people that are active in the channel, how they can be more successful in penetrating the wealth channel and raising capital and other things.
Yeah, what I really enjoyed, Andres, about speaking with you and getting to know you over the last 8 months or so has been that you are very knowledgeable in the alt space, but you're also open to kind of talking to groups like mine that are breaking into it, learning more about it. We've been around 11 years. I've been raising capital with my cell phone and my laptop here for over a decade and doing just fine. But now we're at a point we want to break into the next level, and realizing that we are limited if we're just going out raising capital ourselves. And how do firms go out and raise tens of millions, hundreds of millions of dollars? How is it done? How do they expand exponentially like that? And as I've been learning more about the RIA space and the broker dealer space and fund administrators and so on, and getting affiliated with it, you've been a leading source there for me to really understand it. So, let's say, for example, you're a small real estate business like mine here. You have a decent portfolio, the infrastructure in place, but now you're ready to break into the next level. What should you expect, and what should you have prepared to kind of even get the attention of registered investment advisors and broker dealers, so they're going to give you the time of day and potentially help you raise capital?
Aaron, I love this topic because I think there's an opportunity in this conversation to stop selling and start educating. I think that a lot of times when sponsors are thinking about what I call moving outside of their friends and family, or their first ring network of capital sources. Let's just say you are a real estate syndicator, and that's your asset class. And so you're looking to expand your business and grow your business like most sponsors are. Where do you find the next source of growth? Where do you find this next capital? And really, where do you find the next partners for your venture, for your business?
Right.
And unfortunately, as I've been in the business, not to pat myself on the back, but just through many experiences and trial and error, and in many different roles, what I've learned, probably like you on your journey, is that it's hard to really get good information, and it's really hard to really get educated. Everybody wants you to pay them to learn and get their advice and get their wisdom, and there's no certainty that that's going to actually lead to results. And so I was really glad that you invited me on your podcast to learn more about People's Capital Group, but also to help provide some of that education out into the marketplace. So let's talk about it.
Yeah.
I think, to simplify things and kind of to set a framework for how a sponsor can start to navigate raising more capital, and you mentioned several of the options, right? The independent broker dealer channel, the RIA market. I would also include the family office market, and let's just also go ahead and add in institutional investors, right?
Oh, yeah.
That are interested in deal flow, and they're interested in what we call emerging managers, right? And under the radar niche specialists.
Right.
So those are four very distinct channels, or four distinct types of capital,
hmm
but all of them have one thing in common. and that they're investing in private markets, in this case, alternatives.
Mm-hmm.
We won't get too specific about any one deal or
Mm-hmm.
fund, but they're all investing because they want to accomplish some common goals. And
Right.
those would be pretty obvious to most of your listeners, right?
Mm-hmm.
Diversification,
Mm-hmm.
uh, passive cash flow, right?
Mm-hmm.
Uh, Exposure to up and coming opportunities in their region or backyard, right? Like real
Yeah.
estate developments
Yeah.
or redevelopments, depreciation benefits in the case of real estate, some
Mm-hmm.
tax benefits.
Mm-hmm.
But they all have those same types of things in common. Yes, when you get down to it, a single family office has a different mandate than a big institutional asset manager.
Right.
But what they all are trying to do is utilize private markets and utilize a third party manager
Mm-hmm.
to extract alpha from the
Mm-hmm.
marketplace that they are not going to get, they believe, through a passive index approach, right?
Yeah. Yeah.
Otherwise, why wouldn't you just go do everything in an ETF or an index, right?
Mm-hmm. Mm-hmm.
And the reality is you won't see
Mm-hmm.
that. And so they're going to look for other non-correlated or lesser correlated assets.
Mm-hmm.
And often they're going to start in things like real estate or real
Yeah.
assets or tangible assets.
Sure.
And let's not call it anything other than what it is. They're trying to make money, right?
Yeah.
And diversification. And they're
Mm-hmm.
you could dress it up, but the reality is they're there to make money. And so they will look for talent. They will look for a sponsor who has
Mm-hmm.
demonstrated a number of things that we can talk about. But
Yeah.
at the end of the day, those four groups are all there to make money. And so if you can
Mm-hmm.
demonstrate, and importantly, and we can talk about this if you want, tell a story
Mm-hmm.
and express through that story and demonstrate that your brand and your platform
Yeah.
can be persistent,
Right.
you're going to get a lot of doors open for you. And that's
Right.
different than somebody you're paying opening doors, right?
Right.
People are going to want to introduce you.
Yeah.
Um, but that's a lot to start. But I just
Mm-hmm.
like to encourage people to be optimistic about all these channels and all these
Mm-hmm.
opportunities because it's very easy to meet the wrong person
Yeah.
who's in a position to be influential and helpful to
Mm-hmm.
say, pay me $10,000 or pay me $5,000 a month, and I'll show you the promised land. And I just
Yeah.
don't think
Yeah.
that's the right approach. It's never been the approach I've taken.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth, so find out if you qualify at peoplescapitalgroup.com.
Yeah, yeah, exactly. Yeah, no, I do. As I break into the space, I speak with more wholesalers and broker dealers and RIAs, consultants. It does seem like there's always another person to write a check to, or
Yeah.
at least asking for you to engage on some type of monthly agreement or something like that. And a lot of them do promise the same thing, especially kind of in the wholesaler space. And not to say that wholesaler isn't worth the upfront cost.
Right.
It can
Right.
be, but as someone who kind of has been eating what he kills for the last over a decade of raising capital, and if I don't raise the money, we don't close on the real estate. We don't get the acquisition fee and so on, right? So it's a performance-based business of fundraising. I always felt like that should be where the compensation is, and I don't mind paying a larger performance-based fee rather than a smaller, upfront fee. But I understand why wholesalers need some upfront cash to get out there and kind of start moving the pieces of the board and start making those introductions. But it is a frustrating
Yeah.
proposal. And
Yeah.
what
Well,
I've come
let's talk about some of the basics, like because
yeah.
I think the most beneficial part of the conversation today in our time to those listening around this particular topic, like if I'm a sponsor and or I'm active in this space of private markets and individual deals, and I'm
Mhm.
thinking about expanding my platform, I think what they really want to hear is how do I raise money? How do I
Yeah,
raise more capital?
right,
But I
right.
do think that you have to have some table stakes in place, right?
Yeah,
There
yeah,
have to be some basic things, and I want to get those out of the way so that we can get
sure.
to the more fun stuff.
Yeah.
What are those things, right? So there are a whole bunch of things that a sponsor is going to need to do depending on where they want to go raise the capital from. I mentioned those four channels: individuals, family offices, wealth advisors or RIAs, and then institutions, right? So each of
Yeah.
those four are going to want something different. And so I think you as the sponsor have to really look inward, as you
Hmm.
and I talked about before we started, and really
Hmm.
assess what do we want in terms
Yeah.
of partners that are
Right.
going to be in our fund, in our deal, in
Yeah.
our offering
Right.
for, in some cases, 3, 5, 7, 10 plus years, right? And
Sure.
ideally, are those the partners we want to have long term, or are those the partners that are going to get us to the next deal? And then
Yeah.
we're really looking to ultimately, if you're thinking about it from the GP perspective, you're ultimately always trying to drive down your cost of capital,
Of
right?
course. Sure.
So if you are paying somebody a lot more of your promote and you're giving
Hmm.
away a lot more in the firm of management fees and you're having
Yeah.
to, provide a much bigger incentive, like that's less that you're taking home as the GP, and that's why you're working so hard, right?
Right.
So
Right.
let's be real. The first thing you got to do is be inward with your team and yourself around what kind of partner do I want? Do I want to have individuals and they're going to write me maybe smaller checks, 50,000,
Sure.
100,000, 200,000, or
Hmm.
do I want to and do I want to have 80% of my capital stack be those types of investors, and then maybe 20% of my capital stack, is going to be a combination of those other groups that can
Hmm.
write maybe $500,000 checks. And institutions, they might not even be interested if they can't write a $5 or $10 million check.
Oh,
So
generally a lot more than that. Yeah.
yeah, and and
Hmm.
and up, right?
Yeah.
Because they've
Mhm.
raised so much capital. And
Yeah.
so I think for the GP, the table stakes are do that inward homework, really
Hmm.
get crystal clear. Again, I
Hmm.
can't emphasize that enough. Get crystal clear on what you want. Like you have to have a business model
Hmm.
that makes money. If you
Right.
don't have a business model that makes money, you're just running right in quicksand. So
Yeah.
what that means is look at your overhead expenses. Look at
Right.
what the cost is to run your business.
Yeah.
Look at when you put a deal into that business model, what kind of returns, worst case, base case, best case, do you
Right.
need in order to be a sustainable operation? When you
Hmm.
start to then think about as you expand, what
Hmm.
are the three things you're going to spend your time on? It's
Hmm.
it's simple. It's number one, you're going to be focused on recruiting your team and building your team. And that doesn't
Hmm.
mean headcount. It may
Hmm.
just mean strategic partnerships. It may
Right.
mean you're going to need to go get a bookkeeper. It may mean that you're going to go get somebody to do underwriting, right?
Yeah.
But it's team building.
Hmm.
It's growing as a leader to start
Hmm.
to think about I can't do all of this myself or with
Yeah.
my one or two partners. We
Right.
now have to start to build a team. So that's number one.
Right.
Number two is you've got to have some basic deal flow. You've got to have a basic track record. And
Yeah.
so you can't overlook, right, the importance of just continuing to put deals up on the board that make
Yeah.
your LPs and obviously yourself money, right?
Hmm.
So the track record. And then
Hmm.
three is you've got to constantly be thinking about what we're talking about next, which is the capital side of the business, right?
Yeah. Sure.
And those are the three things as a GP that's building a syndicator business platform or building a
Hmm.
fund platform and getting out there beyond friends and family. Those are the three things you're going to spend your time on.
Hmm.
And depending on which of those channels you decide you want to pursue, and maybe you'll pursue multiple channels, there's going to be table stakes that come into it. And you're aware of those things. You've got to have
Hmm.
some basic books and records, you got to have some basic
Yeah.
reporting
Yeah.
capabilities. A lot of this
Sure.
stuff can be done pretty, cost effectively and efficiently. There's all
Hmm.
kinds of uh, platforms now and tools and offshore that you can now do pretty cost effectively.
Yeah.
But one thing that you can't do real consistently unless you're out there building daily is deal flow and capital. And
Right.
so I'd love to, spend time on that part of it, like more
Hmm.
the capital side, because I think that's really where, your listeners and maybe even, for your platform as you're thinking through these strategic decisions, it's
Yeah.
like, okay, we've done the work, we've got a profitable model,
Hmm.
we've put up a track record of good deals.
Hmm.
Now we want to start to go out and pursue, more LPs or bigger
Yeah.
LPs or more
Right.
strategic LPs. And what are
Right.
the things that we need to do?
Exactly. And what's interesting is I find that different sources of capital require different things.
Right.
As we talk to more institutional level investment institutional investors, they're seeking audited financials where and they don't really care about the third party reports, where you
Right.
go to an RIA or a broker dealer, they're going to say, oh, we need the third party report. We don't necessarily need audited financials, which doesn't really quite make sense to me. I would,
Yeah.
audited financials help, but it's not as necessarily as the third party report. And then, of course, with family offices, so a lot of them don't require either one. It's more of a relationship based. That track record has to be there. But you're absolutely right. If you don't have the infrastructure, the track record, good bookkeeping for your company, and performance, a show of performance through the years, then it's too soon for you to go out and try to break into this space. Also, liquidity. You need some cash, probably a
Yeah.
minimum $150,000 to go out and really get all these third-party reports. If you need an audit, that's going to cost something as well. Go to these events, go to these different conferences, sponsor these conferences. I mean, to speak at a lot of these conferences is $25,000, and that's just to get on stage at one conference.
Yeah.
So
It's crazy.
it makes a lot. And the fact right reports, 22 grand for the deal-based report. That's for one deal. And then it's 32 grand for the sponsor-based report. So that's $55,000 right there for those two reports. You include the flight and the hotel. You already you dropped 80 grand just getting in front at one event. You better crush that presentation at that event. So, and it takes multiple events to really get out there and get some traction. And then, of course, I want to spread a little light here also on the different roles in the space, because people might not understand. So just defining them. So what a wholesaler does is they go out and they essentially set up the meetings with family offices, with RIAs, with broker dealers, and then say, hey, here's a warm introduction to or even an institutional group. Here's, these people, here's a warm introduction. I have a relationship existing with them, and I'll go out and I'll set up a lunch with them or a webinar you can do to start presenting your investment opportunity to them, and ideally soliciting an investment from them. So that's the wholesale. They often require some type of upfront fee, which is usually on a monthly basis, to go out, travel to these places, and set up those meetings with these warm introductions. The second thing is, I'd say, the RIA, the Registered Investment Advisor space. Now, we really like RIAs because they're essentially managing other people's capital, and a good RIA could have 100 family offices in their network, or 500 high net worth individuals
and other RIAs.
Yeah, and other RIAs.
All right.
Exactly,
I mean,
right?
they probably worked at a number of other RIAs before they went out on their own, or if they're in the position of due diligence or research at an RIA, right? So they're going to be what we call a gatekeeper. They're going to be an important key contact. They may not own the firm, but they're going to be, the person that you spend a lot of time with trying to explain your deal, explain your offering, explain your fund. And so you have to also know the people that, own the firm and or sit on the investment committee, right? Those are critical pieces, but often that research, due diligence, gatekeeper is going to be essential depending on the size of the firm. I want to go back to what you said about wholesalers, though, because the terminology is important.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com.
So now that we're talking more of the capital side and we're getting into the different channels, right? Like the beauty of the individual that's accredited that can invest in, like a 506c offering, right? So they meet minimum requirements for the SEC. They make $200,000 a year minus their residence, or if they're a couple, filing jointly, $300,000 a year minus the residence, and the expectation that they'll do that again. Et cetera. Those rules are probably going to evolve, or my anticipation is we're going to start to see under this current Trump administration some modifications, but they haven't yet. So the reality is you got to find accredited individuals, and they can't just be accredited. They've got to be accredited and liquid. They've got to be in a position to actually invest. Yeah. So there's a lot of capital out there of people that make enough money or have enough net worth and above, right? But they don't know the first thing about investing in alts. Why? Yeah, because their advisor has them in a bunch of Vanguard, BlackRock, Invesco, index funds. to say nothing bad about those firms,
Mhm.
right? It's just that that's the model they're in. They're
Yeah.
in mutual funds, they're in index
Right.
funds. So not all individuals are going to be the same, right?
Mhm.
So there's a lot more of them. There's
Mhm.
probably 13, 14 million accredited investors in the US, right?
Wow.
And
Yeah.
and so you go on Instagram, you go on TikTok, you go on, any platform these days, and you type in, private wealth or real estate or
Mhm.
crypto, any number of these alternatives or buzzwords, and you're going to get
Mhm.
all these promoters who
Mhm.
are out there talking about how you can make a bunch of money flipping real estate, buying
Mhm.
crypto, investing in this or that.
Yeah.
And there are a lot of people that are looking for guidance on how do I invest in
Yeah.
non-stocks, non-bonds, non-mutual funds, non-index funds.
Right.
And it's crazy that they're going to social media to get
Sure.
education. But
Right.
they
Yeah.
are because
Yeah. They are.
there's a shortage of it.
Mhm.
And again, I'm a financial advisor. I mean, we're a fiduciary, right? We're a
Mhm.
dually registered broker dealer and RIA,
Mhm.
and even we have a hard time finding clients who, want our services, want our help, but there's always this big disconnect. So
Mhm.
individuals, there's a lot of them out there. The good thing is they can make their own decisions. The hard thing
Mhm.
is it's very difficult to scale, meaning
Yeah.
unless you have a big megaphone and a big media presence and a big marketing budget, like it's
Yeah.
very difficult to consistently get their attention.
Mhm.
And, say what you will, but individuals face life events. They
Sure.
don't have to make an investment decision.
Yeah.
Nobody's paying them a salary every day to wake up
Right.
and look for Aaron
Yeah.
and the
Mhm.
best real estate that they can find in northern New Jersey in the multifamily category. Like
Right. Right.
it's I don't want to say it's a lifestyle choice, but very much factors are going to come into play. So if you
Yeah.
go after that capital,
Mhm.
just understand that that time frame to raise it, the
Mhm.
decision making process, the due diligence process may be super fast, but it
Mhm.
also may be super slow.
Oh, of
And
course.
you may end up spending a lot of money on pursuit costs, but you may not.
Mhm.
Sometimes it's like I said, and this, word of mouth,
Mhm.
so and so at the, office tells so and so, or
Yeah.
somebody is an investment club with another. So there's so many aspects to the high net worth that make sense.
Mhm.
But when you get to wholesaler, I think it's
Mhm.
important to explain what those guys do and what that
Mhm.
service is. A lot of times these wholesalers work for what's called a managing broker dealer or a dealer
Sure.
manager, and
Yeah.
sometimes they don't. And
Mhm.
that's an important distinction because if they're not registered with FINRA, then you have
Mhm.
to be real, real careful about
Right.
having somebody out there in the marketplace talking about you.
Right.
And if it's a solicitation, and
Mhm.
if they're actually talking about a specific fund,
Mhm.
now you're in an area where you got to really tread carefully,
Sure.
right? And I'm no lawyer and I'm no compliance expert and I'm not here to give legal counsel, but I just
Mhm.
always guide sponsors to think about
Mhm.
doing their due diligence around who are you engaging.
Yeah.
Now, they could be a consultant and they're just making warm introductions and they're
Mhm.
not talking specifically about an offering or about a fund. They're not
Mhm.
showing a prospectus. They're not showing a PPM, for example, as we call
Right.
it, like a private
Right.
placement memorandum. They're
Yeah.
just making an introduction. Well, then you got
Mhm.
to ask yourself, what else is out there, right? Are
Mhm.
there MBDs, dealer managers that are actually FINRA registered and they provide this as a service? And
Mhm.
I would put those in more of that category of you're going to get a lot more of what you pay for, right? If
Yeah.
they've got a track record, if they have experience,
Yeah.
who are their relationships?
Right.
Who
Right.
who can they connect you to and be willing to ask and do ask those questions up front and
Yeah.
then understand like what does a successful engagement for them look like? Is it
Right.
making introductions and then you take it and run with it? Or
Mhm.
is it no, we're actually going to bring you along on our roadshow.
Yeah.
We're going to expect you to pay for it, but you're going to go
Right.
around and sit with these different folks. And then
Yeah.
as you think about the RAA market, like the wholesaler is even still the best wholesalers are still trying to figure out how to penetrate that channel because the
Uh-huh.
independent RIA is probably the fastest growing channel
Mhm.
of the four that I mentioned,
Right.
right? I mean, there are millionaires being minted every day, and there's a lot more people retiring every day, like that baby boomer generation.
Yeah.
But that fastest growing channel and the biggest transfer of wealth that we're going to see in this
Mhm.
country that's going to take place over the next 20 years
Mhm.
is going to be significantly beneficial to the right RIAs that are set
Mhm.
up
Yeah.
the right way to
Right.
guide clients and
Yeah.
help clients to get into alternatives, private markets. And
Mhm.
that's why we're super excited because we
Mhm.
see our brethren, our fellow RIAs that are doing it the right way. They've got due diligence processes, they've
Mhm.
got relationships, they're investing and getting to know sponsors like yourself, they're
Mhm.
attending trade shows and conferences like you
Right.
mentioned,
Right.
the fact rights of the world, and they're really investing in trying to be leaders in that
Mhm.
category. And I think
Yeah.
that those are the types of groups, as we said off air, to the extent that you can get to the ones that are still owning the decisions around investments,
Yeah.
those are the types of firms that you really want to hone
Mhm.
in on.
Sure. Sure.
And then,
Exactly.
yeah, we could talk about institutions, but I'll leave it there because I
Yeah.
think the terminology is super critical
Right.
once you get out there and understanding like what are we asking these folks to do on our behalf.
Mhm.
Are they in a position from a regulatory and compliance standpoint to even do that,
Yeah. Yeah.
and be
Mhm.
above board in the doing of that?
Right.
Obviously, what are the economics that are involved? What are the terms? All of
Yeah.
that type of stuff really matters. And then most
Sure.
importantly is going back to the beginning, like, does this align with our objectives as a platform? Does it help
Mhm.
us to get where we want to be in a year, in 5 years, in 10 years? Because you
Yeah.
obviously, all these relationships matter and all of them take a lot of time, right?
Yeah. Yeah. They do.
And so
Absolutely.
where
Yeah.
you shoot your arrows, as they say,
Yeah.
really
Yeah.
does matter.
And that's the whole idea as a fundraiser to connect with broker dealers and RIAs because they've already worked those relationships for many years. And investment decisions are based on relationships. That's
Yeah.
the bottom line. Most people will sacrifice a few points of return on investment for some, an investment they know is from a trusted source and limits their risk as well. So,
And that's why I think it's so important just to jump in, like
mhm,
to get down to brass tacks around, okay, let's say you do get that meeting. Like this is
mhm,
really around you preparing as a sponsor
right.
to go on the road or to be
Yeah.
presented to these firms and what do they want to see? Okay.
Yes.
So
Mhm,
again, I have the utmost respect for all the due diligence firms out there. There's a
mhm,
lot of them and they all do really, noble work and good work. They're trying to
mhm,
serve investors like us and our clients by doing,
mhm,
legal reports, writing opinions on
mhm.
sponsors and on their offerings, groups like
Yeah.
that you mentioned earlier in the podcast. But I think it's really important to explain and help people to understand, like when you are looking at a manager and a sponsor for the first time, like what are the things that you're going to be looking for, right? From our
Mhm,
perspective as allocators, as investors. And so how
mhm,
can you as a sponsor listening or as somebody that's trying to take a sponsor out into this channel, how can you stand out? Like what do you need to
mhm,
do? Again,
mhm,
assuming all the sort of table stakes is in place, the
mhm.
back office is set up, the everything's good. You've
Track
got
record.
good deal flow, the track record's tight.
Mhm.
Now, what is the story? What is the
Yeah.
brand? Right.
Right.
And
Right.
and so
Mhm,
those things, I think one of the least uh glamorous parts of this,
mhm,
but the most critical is the data that you
mhm,
actually can demonstrate with
mhm.
data
Yeah.
that your story makes sense, that
Right.
your track record makes sense.
Right. Right.
And and not to, take and I'll use a bad term, but a lazy approach
Right.
to people's due diligence process
Mhm, mhm.
by saying, just, look at our data room. It's got our deck. It's got our offering docs.
Right.
It's got, some financial reports and it's got every deal like that
Mhm.
we've ever done.
Right.
What I think the better approach is to really think about that other partner, that future LP on the other side,
Yeah.
whether they're an analyst or they're the owner of the family office or the
Mhm.
RIA, um, or a potential asset manager, like institutional, like
Sure.
go to the highest standard possible
Mhm,
in terms of the numbers, the questions, the
mhm.
information,
Yeah.
and fill in at that standard. And
Yeah.
then,
Exactly.
if you do it at that standard, then think about telling a story through all
Mhm.
that information, all that data,
Yeah.
that track record, that an individual who doesn't do this for a living
Mhm.
could understand.
Right, right. Well, as they say, facts tell, stories sell, right? And
Yeah.
no matter you're managing a multi-billion-dollar fund or an RIA with a couple hundred million, under their belt. They're an AUM or, a broker dealer that's going out and hitting the phones and calling up client by client, accredited investor by accredited investor. It's the story at the end of the day.
The story is so critical and it's got to be compelling. And so you've really got to have a narrative, right? And I encourage sponsors and folks that are going out in the market trying to open doors and raise capital. I'd really encourage them to think about writing, literally. I know it's not something we do a lot anymore. Writing the narrative of the firm or the GP, and then writing the narrative of the actual investment, right? Why we're doing this. I know that the idea of writing monthly and quarterly letters is still, something folks do, but writing a narrative in like a longer form, like a 2-pager, and then trying to really simplify it down to the salient points that somebody that doesn't know you would really investigate. And there's some things over the course of my career that I've really picked up from other folks, but I think they're important, which is
at People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com.
Take a deal out to the market as a way to start that conversation and introduction, right? You can be a blind pool, and that's okay. And you can have aspirations to one day have a commingled fund, right? As we call it, but take a live deal that is investable today and have it fully baked in the sense of you have fully underwritten it. You've pretty much lined all your, if you're a real estate sponsor, like your debt financing is teed up. You've got a lot of the equity spoken for. You're obviously contributed a meaningful amount of capital, but have all that in place and then take this live deal out. And even if you get no, you're showing something that I think is important, and that's something that's actionable.
Yeah, right.
Well, and
people
give
love
something
deals.
people to decide on, right?
Yeah, exactly.
Because time kills deals.
Right. And you know what it is? Everyone's a deal junkie in this business. That's the thing. You talk to some of the most successful fundraisers, they say, have a deal ready. People love a deal, right? Here's the address, here's the strategy, here's the timeline, here's the target returns. People need to understand that visual there, that example, and it's all about having a good deal. They say, some fundraisers say, oh, have a good deal, the money will come. That's not true. It's a combination of having relationships in place, a track record, your ducks in a row, and a good deal, and then the money will come. It is a process there. But man, at the end of the day, we're all deal junkies. We all love a good deal. And it's also, the art of sale is scarcity, right? Timeline, fleeting timeline. When you have a deal and you say, we're closing on this in 90 days, investments have to be in by 60 days. Oh, now we're moving. Now we have timelines. The thing about a blind fund is, it's going to be open for a year. You could do it now. You could wait for us to close on something, and it's just open-ended. Unless you're like BlackRock and you can fill that thing up and it's going to close out, it, then, smaller firms getting started, have a deal, make it your best darn deal you've ever found or something close to it, and get it out there, present it in the right way, backed up by your track record and your story as well. But also have the capital ready to put behind it, and understand that blueprint, managing broker dealer, what roles do they do? Do you want a managing broker that goes out and sells your product or just kind of facilitates the capital?
Right.
Fund administrator, we didn't even touch much on that.
Yeah, there's so many other parties that are going to be involved. So
fund administrator fund administrator and managing broker dealer kind of overlap in a lot of ways. Do you need both? Maybe you do, maybe you don't. And then of course, institutional level capital, what are their requirements going to be? If someone's writing a check for 80-90% of your capital stack, they're going to have some say in the terms of it. Where if someone's writing a check for $100,000, then you're really calling the shots there on the structure of your fund. So, but there's pros and cons to both. Andres, I do have to get on actually to speaking with an accredited investor, as I raise a lot of capital over here, working with accredited investors and high net worth individuals, and we're also in touch with institutional level and family offices, and of course RIAs. So we have a lot of contacts there. I think you're talking to the wholesaler, the managing broker dealer, and everything above right here. So as we
Sometimes you have to do it
yeah,
all, and I
absolutely.
appreciate you having me on, Aaron. I understand, like I said, the three most important things are going to be building your organization, doing deals, and raising capital. So
Yeah,
I completely
yeah,
get it.
absolutely. How can people get in touch with you and learn more about your
Yeah.
services? Yeah.
Yeah, well, I mean, I have a podcast myself.
Mhm.
So that podcast is ATL Alts, where I provide education and have guests on to talk about alternatives in private markets. So that is Andres, ANDRES at ATLalts.com. And we have a website, ATLalts.com. You can find me out on all the social media under ATL Alts and also on LinkedIn. And then our RIA is called Gramercy Park Wealth Advisors. So the website is gpwealthadvisors.com, and love to connect with folks and see if I can be helpful and help them on their alts and private markets journey.
Awesome. So yes, to our listeners here, definitely connect with Andres. Just take a listen to his podcast, ATL Alts. He's got a lot of great sponsors on there and great investment tips as well. And if you don't have an RIA, then check out Gramercy Park Wealth Advisors. You know, it's important to have an RIA in your corner, bringing investment opportunities, allocating some wealth to them. And, I think Andres is really a stand-up guy here. So I've enjoyed getting to know you, Andres, and I think you'd be a great fit for a lot of our listeners here. So to our listeners, if you're enjoying our content and the value we're aiming to bring you here with the Passive Cash Flow Podcast, be sure to share it. Share it with any friends and family, co-workers in your network that need to learn more about how to build that passive income and passive wealth. As you see, we have all different types of guests on here, not always real estate related, but usually somehow traces back to real estate, of course. And of course, here at People's Capital Group, we focus on acquiring assets throughout Northern New Jersey and helping people build and preserve their wealth through Northern New Jersey apartment buildings. So always a pleasure, Andres, to connect here. And one more time, how can they connect with you there?
Yeah, thanks, Aaron. So it's Andres, ANDRES at ATLalts.com.
Okay.
And GP Wealth Advisors is just gpwealthadvisors.com. Again, look forward to connecting with you again, Aaron, and congrats on all the things that you're having success with at People's Capital Group and with the podcast and all the investors that you're helping generate passive cash flow.
Thank you, my friend. Absolutely. Same to you. We'll talk shortly. All right.
Take care.